Hi, welcome to the market alert for Tuesday the 2nd of December 2014. And starting off in the 5-minute chart, we can see the market was fairly quiet in the pre-market session for several hours. The market finding support at 17,750. You can see there how the market's every time it got down to this level reversed and then moved back to the upside. And again, if you've watched the videos on the test bars, you will see the blue testing bars there at this level and the increase in volume as the market is actually bought back there. So the market kicks off the day session with a potential sell signal. We've got the 17,750 support here, and we see the market trading through this. It's got to go through this in order to move lower. We see some professional selling coming into the market, followed by more driving through the 17,750 and the support to the left, which is what you've got to see. However, as soon as the market hits the scalp target, you see a massive increase in buying. And again, if you've watched the test bar videos in the additional training section of the website, you will now know and be aware that this type of activity indicates that the market is being bought back there. So you can see prices coming off the lows, market being tested, very high volume, in fact the highest volume bar for the session, and also the range of the bar is less than the previous bar. So again, this is what I would call a buying pressure test bar. This is at the scalp area, and this should alert you to either 1, lock in profits, 2, move the stop to break even, or 3, just take the profits off the table there. So that's the first trade. The second trade, of course, we're coming off the background where we've got the market showing that the selling has disappeared. We've got very low volume in this bar, and then we see new buying coming into the market up to the psychological level of 17,750. There is some selling here. So what is the selling? Well, there's two things that are of interest in this bar. The selling is quite high, and what's happening here is that the traders, knowing full well that the market's broken the 17,750, a lot of people will have gone short and used this level to actually place their stops. So what's happened here is the market has moved higher. They've hit these stops, and that's why you're seeing an increase there, but not actually going off the back. So they're switching the positions. They're buying back the market and taking out the stops, and then we see the buy signal there. So we've got a buy signal, which again goes on to make the 20 pips and more. And what's interesting here is the market trading back up to the 17,800. The volume isn't massive, but it doesn't need to be, because all of the activity in the buying took place in this area. The weak traders were removed, and they could move the market up freely. So that's what you're seeing there. So again, over 20 pips in this trade as well. So that's 40 points, not pips, sorry, 40 points in the first hour of the trading session. And then we see the market moving back down and finding support at this level once again. We see the buying coming into the market. We've got the green professional buying there. The market starting to move higher, but then we go into the late afternoon session where the market doesn't do a lot at all, and we get this potential sell signal. Had you a switch from this trade to this trade, that would have resulted in a 10-point loss. We then get the buy signal replacing the sell signal there, and again, if we just mark this up, you'll see the market going through the scalp target there. But if you look at the volume window, you will see that this volume bar is above the average. So again, we see the professionals buying back at the previous day's low on the pivot line there. So they've bought the market back, and then we see the market driving higher. The market going through the 17,800, but then stopping in the previous resistance to the left there. There's some weakness coming into the market, and we can see it here in this the volume at the bottom here. We've got an up thrust type bar before the following the telegraph pole, and then we see the market moving on down to the previous day's low once again, and then stopping. So we can see the trigger point for the market turning at the top here. We've got this sell with the very high volume there coming off the highs, and then you see the market rolling over and coming back down to the low. This signal is late on in the session. You've already had 2040, a loss of 10 there, bringing us back down to 30 plus another 20 there, so over 50 points. So the last hour of the session is your decision, and if you had have traded this one, then at 20 past 8, sorry, this is at 5 past 8, then you know the market's struggling with the entry price, and also you see it starting to close back below the psychological level there as well. So it's a bit late on in the session, and like I say, if you've already taken 50 points off the table, there's no reason to stay in for the last hour at all. It's a bit different, as I've said on previous occasions in the market alert. If you've had a few losses, then it's worth staying in because the market will break at some point, but if you've already bagged the profits, then there's no need to do so. In the daily charts, very interesting picture here as well. Let me just rearrange this slightly, and if you have a look, you can see we've got a bit of a trading range going on here at the moment. So I'm just going to put this in. So you can see we're in a range bound market. 7892 is the all-time high. 17698. You've got a base there as well, because the low of the professional buying bar is a crucial area. We got some selling for yesterday, but what's very interesting about this is the market's come off the low of this bar, and when you see this happen, the market tends to reverse and move to the upside. You can see it here as well. If the market finishes on the lows of a red selling bar, the market then continues lower generally, but if it comes off the lows like it did here and here, you can see what the effect is. So the market looking as if it wants to move back to the upside there. And finally, in the news, we've got an interesting bag of news at 1:10. We start with Fisher speaking from the Fed, then Yellen is speaking at 1:30. Only a medium impact news item, which seems slightly odd. And then Brainard speaks at 5 p.m. So watch out, 1:30, 2:30. Yellen should have finished by 2:30 anyway, and the market will have factored in what she said. But just keep this in mind, and if there's a lot of volatility before the market opens at 2:30, so from 20 past 2, if it's still really volatile, then she will still be speaking, so just be warned. But I wouldn't think so, not for an hour. That's a long time, that is. So, but just keep that in mind anyway. And finally, on the implied volatility front, we've got 12.15, big increase yesterday, and that's probably down to the volatility in the crude oil market. Crude oil yesterday finding a massive support, and I would say that it's also the end of the down move for crude oil as well. So I'll just show you the Brent. You can see there the market coming strongly off the lows yesterday. They didn't want that down at $67 a barrel for long. Let's see how this pans out over the next few days, but that's certainly what brought the Dow up yesterday. So we've got a big crossover there in the historic against the implied. The implied needs to pull back for a correction to occur in this market, which is probably why it's no surprise to see it moving to the upside yesterday. I expect this to drop off back to the downside today, unless of course Yellen says something that sends the market into free fall, which I can't see at this time, and the traders are not going to allow it because it's bonus season as well. Right, that's it from me. If you've not seen the test bar videos, take a look there in the member section of the Pinpoint Trader website under additional training videos. You'll find 9 videos there about the price bars that we've just looked at. Right, that's it from me. I will see you in the next edition of the Market Alert. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. See you in the next one.